So I'm sure the first time you came across ICT concepts, you were pretty amazed, right? Same as me. I came from a retail background. I'd been trading trend lines, support and resistance, all this type of thing. And I came across a guy that essentially was saying that he pretty much coded the algorithm, right? And he understood every price movement. He knew why price moved from zone to zone. And to a certain degree, he could prove that he was capable of doing it, right? Now that's like basically the premise of ICT, and that's what all sort of drew us in and sucked us in, right? Now, over the last 5 years, I still do believe, in terms of every single strategy I've ever looked at, that ICT is the best, right? But sadly, there is a bit of a dark truth towards it, right? And there is a reason why, in my personal opinion, right, that most traders, or most ICT traders specifically, will never become profitable. So my promise by the end of the video is basically for you to actually gain the necessary expectations that are required to excel with ICT concepts. It isn't that the concepts aren't good, it isn't that the teacher is bad, anything like that. It's more around the expectations that you go in, right, with the way he markets the ideas and the way he actually talks about them. So these are basically the points, 5 points I'm going to be going over. First of all is why ICT is the best school of thought. I'm not bashing ICT by any means. I trade ICT. I'm a big advocate of ICT. So it's important to understand, like, in my personal opinion, you are in or have access to probably the best technical analysis that is out there. Okay, my personal opinion. Right, then I'm going to talk a little bit about high risk to reward, social media perceptions, and then the real expectations actually necessary to reach profitability. And therefore, again, at the end, what you must actually focus on. So let's check out the first one. So why is ICT the best school of thought, right? Well, I think the main takeaway, right, is that you have the ability to reverse engineer every single move in price with great precision, right? Now, why is this a good thing? Well, originally, right, let's say you came, like me, from a retail background. You would have initially thought that the market is super random. Like, for example, maybe you guys were familiar with the idea that the M1 is noise, right? I was taught that a lot when I first was coming up as a trader. And I basically just didn't understand why anything did anything, right? I had my trend line on, I had my support and resistance levels, and yeah, I was just hoping that it would respect the trend line and move, right? But in terms of actual specific logic, there's actually no reason for my trend line to get respected, right? The actual back-end knowledge behind it doesn't actually make sense. Now, that's not the case with ICT, right? He's taught ideas such as fair value gaps, order blocks, different kill zones and times and sessions, all these different things, right? And it's allowed us to specifically hone in at specific times of the day, at specific price points where we know price is likely to react and give us some sort of move, right? Now, the ability to reverse engineer a move allows us then to dissect a prior move and actually understand why it happened, how it happened, and potentially giving us aid in being able to trade that move again, right? So the ability to actually do this is amazing, right? But, big but here, however, it comes at a huge cost, because the problem is you actually start to believe that just because you can reverse engineer a move, it means that you can trade it, right? This, I think, is a huge misconception. Okay, let me repeat that. So just because you understand a move in price, right, you can see price moved from A to B, right? Even if it's in a consolidation, let's just say we're in a consolidation, for example, and you understood that price moved from some sort of FEG to the consolidation high, right? Just because you've been able to pick apart that move, okay, from a back-tested standpoint does not mean you can trade that move, right? And the other thing is, it doesn't mean it's actually a high probability move to actually trade, okay? So I've written there, let me debunk this theory for you. Just because price reacted from an FEG doesn't mean you knew prior that it was going to react there, okay? Just because price rejected off an order block, how did you know price wasn't going to reject off the rejection block or the mitigation block or the FEG. Yeah, you could come up with these ideas. It was the next FEG in proximity, but the point is the market still, with the ICT knowledge that you have, doesn't mean you have 100% read on price, right? And that's the way he sells it. That's the issue, right? He sells it as the idea is this is the algorithm. The algorithm can do certain things, and although, again, like I said, it's probably the best school of thought out there, it gives you this false sense of confidence and a false sense of ego that you're somehow above everyone else in the technical analysis space and that you can read price and they can't. Okay, so the main thing you actually need to focus on, right, are the moves that are forecastable. Okay, and a key thing to understand from this, a key takeaway, is that some moves, okay, are forecastable and some are not. All right, it doesn't sound like a word, forecastable, does it? But you need to understand that there's some moves that are high probability, that are good, that are sort of in line with the key times, key arrays, etc., etc. And there's some moves that you'd want to stay away from. Okay. Now ICT, because of its precision, opens up a ton of possibilities in regards to having a tight stop loss. Right. I don't think there's many other schools of thought that really offer a really tight SL, other than if you're looking at stuff like supply and demand, which I feel like is a derivative of ICT anyway. Okay, so because ICT stuff is so precise, right, it gives you again this idea that you can have a super tight SL, right? So like I've written here, having the ability to reverse engineer it means you start to believe your SLs can be super tight. Now, don't get me wrong, you can have a small SL, okay? I'm not saying you can't trade with small SL. There are people out there who do trade with small SLs, but I think the thing that's not really explained is that there's going to be costs, but not just because you have a tight SL, but in a ton of different elements, right? For example, spreads, okay? So just let's say you have, I don't know, 2-3 pip SL, and you're looking to take a trade. The spread most likely isn't going to fill you on the exact level you're trying to enter. Okay, so you may be entered 0.2 pips, 0.3 pips above you or below your entry. What's that going to mean? That's another 10% added on to your loss if you end up taking a loss on that trade, right? Then you have commission, right? The smaller your SL, the larger your lot size is going to be, and the more the commission. So that's going to add on maybe another 0.1, 0.2%. So now where you're risking 1%, you're going to end up taking what, a 1.5% loss just with spreads and commissions involved, right? Second of all, you have the win loss. Now, and this comes from someone, look, I used to trade high risk reward. I really did think that was the way. That's what I was taught by previous mentors. I really thought that it made sense. And not until I really thought about it critically, I realized that there's so many drawbacks to it. So with the win loss, right, all these guys on social media are going to show you these high RR wins, but not many are going to be authentic about them taking 7-8 losses in a row just to get that one to whatever, the high risk reward, right? Now, don't get me wrong, you can do it, right? I have been there and I have attempted to do it, right? Where you're taking quite a few SLs, but then you're hitting that high risk reward. But overall, your equity curve ends up yo-yoing quite a lot, right? Because when you finally do get in that winning trade, you're struggling to hold the trade because you might need to be recuperating a ton of different losses prior. Again, with this sort of model, the funded challenges aren't a great tool for you because you're going to end up potentially hitting the max daily loss, or you're going to run out sort of like minus 10% before you even get the trade that you're after. So just in terms of like a smooth equity curve, you want to see something that is sort of gradually going up, whereas with having your SL so tight, again, with the precision that can come with ICT, you end up just yo-yoing the whole time, which is, again, quite frustrating. And it takes a big mental toll on you. I think that's the other part that people really don't consider, is how hard it is to actually take that many losses in a row. Like, when I think back to that time, I think, bloody hell, like, I don't even know how I did it. I don't know how I was taking all these losses in a row and being able to just carry on and persevere. Like, it's crazy. And don't get me wrong, right? I thought, and I think we all believe, right, we're going to be that one exception to the rule, right? Who's going to crack it, who's going to have like the algorithm under our control, and we can have these like stupidly tight SLs, and you'd be getting these like 1-to-100, like crazy risk rewards, like have a clean slate win-loss ratio. But I mean, I don't even like the word realistic, right? In my heart, I'd say to you, look, maybe you be the one to do it, but it's better to just get that profitability under your hands first, right? Being able to understand, look, open your SLs up a little bit, right? Have them at reasonable sizes, okay? An SL is supposed to be in an invalidation area, so I'm not trying to say here like if your SL in the trade that you're looking for is only like 3-4 pips, and that's justifiable, right? Because let's say you've waited for a market structure shift, liquidity's been taken, and your SL is reasonable, like the SL should be at that point, and you've given it sufficient room, then by all means take the trade, right? But if you're just trying to get a small SL just for the sake of maximizing risk reward, that's where the issue comes in, okay? So social media, right? Now, this is talked about a ton online. We all know that social media is a load of crap. The way traders will promote themselves online is all load of shit. And that's why when you are trying to come up as a trader, I would definitely advise taking a break from social media. And the other thing, and I am also a huge victim to this, is just stop trying to learn new concepts, right? I'm assuming by now, if you've come across my content, you're going to be someone who's already pretty sufficient in understanding technical analysis, because it's likely you've come from the Instagram. And to be able to learn or understand the reels that I've been making, your technical analysis is probably pretty good, right? So it comes a point where you do actually need to stop learning new concepts, okay? Again, look, for me, the trading part always became a bit mundane, right? And to keep me sort of preoccupied and feel like I'm actually learning something, I'd always like to learn something new. But there came a point where I was like, cool, look, I need to actually stop learning new stuff, because it either just interferes with the current method I have, and it takes time to readjust my eyes back to what I was looking at, or the new concepts, right? What I've realized, right, past a certain point, learning new stuff has diminishing returns, right? So what that basically means is at the start, when you learn, for example, what an FEG is or what an order block is, right? In terms of, like, let's say a progression level, FEG might take you all the way to here, and then order block might gap you that far in your knowledge where, cool, you've made like leaps and bounds in such a small amount of time. But when you start learning more and more and more and more stuff, those leaps and bounds become very, very small, and it only really offers you a small adjustment or small improvement, and taking maybe all those hours to learn the new concept then isn't really worth it. Okay, and it took me a long time to understand that, right? That's coming from someone who, look, I loved learning new stuff all the time, constantly. I'll be looking for stuff constantly, right? And again, it just comes to the point where, look, your technical analysis stat is maxed out, and you just need to start focusing on the other stuff, right? You actually need to look and find pleasure in improving your other areas in trading, right? Find pleasure in logging, find enjoyment in actually logging down what were your mistakes, what were your improvements. You have to sort of have a bit of a mindset shift there, yeah? Now, again, majority of the people online are just clout chasing, right? All these new concepts, influencers coming out with their new concepts, CRT, all this sort of crap, right? I have a bit of a gripe with CRT, because that's a concept, right, that someone actually taught me like 2 years ago, and a guy's coming out saying that, this is like a brand new concept, he's authored it, blah blah blah. It's just rubbish, right? And again, the concept itself it's not amazing, right? The other thing is shiny object syndrome. I've actually written objective syndrome. It's object syndrome. That's obviously when someone brings out a new concept, i.e. CRT, and everyone's raving about it online, thinking that that's their answer to profitability, okay, which obviously it's not. And the other problem with social media is it builds unrealistic expectations and FOMO. When you're looking at social media and it just looks like everyone's catching all the trades, it's all crap, right? It's all bullshit. But the problem is that that's obviously going to create a feeling state in you that's going to put you in that sort of lack mindset. Okay, it's going to make you feel like, oh, I took a loss today and this guy's up like 5 trades in a row. Like, it's crazy how stupid social media can be, and such a detriment it can be, right? I feel like if I actually got off social media a bit earlier, or just didn't look to absorb content anymore, I would have been able to progress a lot quicker. So let's have a look at the real expectations you actually need to then reach profitability. Okay, so this is where the mindset shift comes in, right? Even though, like I said, right, I'm a guy who's sort of like that unrealistic believer. I like to believe that, yeah, cool, maybe he knows more about the algo, and that one day, how you might be the one guy to, I don't know, crack everything, right? But for now, if you are unprofitable, right, just view ICT as a trading edge, okay? Because that in itself will transform your trading. Okay, why will that transform your trading? Right now, you have maybe the idea that the algo is in your hands and you can predict every move at any time of the day. You know why every single move happened. You knew why it stopped at this specific price level, right? The only issue with that is then you create unrealistic expectations for your results, right? You may be looking to think, yeah, I want to be making 20, 30, 40% every month, right? It's unrealistic, okay? If you was doing that and you was capable of that, you'd be outperforming every single asset in the entire world, okay? And now again, look, like I said, you may be the guy to do it, but if you are unprofitable, make the first step first. Yeah, if that's your goal at the end of the day and you want to become sort of world record type in the history books guy, then cool, you can do that, but just hit the first hurdle first, right? And that's to understand that every edge has winners and losers. Just because you have superior technical analysis knowledge does not mean you are void of losses. Now, just because ICT will equip you with the best technical analysis out there does not mean that you will never have a losing streak, and that does not mean that you won't have losing weeks and losing days, right? You have to ground yourself in that sense and understand that just because you do have superior technical analysis does not mean you are void from losses that come from trading edge. At the end of the day, your trading is essentially skewing probabilities in your favor. Okay, that's the point of an edge. Yeah, the point of an edge is to skew the probabilities in your favor so that on the string of trades, right, let's say that's 10, 20, 30 trades, you're going to be up, you're going to be profitable, okay? Now, the only thing that is actually important, okay, in this entirety of trading itself, right, is your ability to execute your rule-based edge. Okay, that is actually what makes you profitable. Nothing else will bridge the gap for you, okay? So my advice to you would be, look, define which parts of ICT you actually want to use, take them away, use them, correlate them together, create a trade plan, create a model, and then evaluate yourself week to week on your ability to actually execute on that plan. Okay, so let's have a look. Finally, what you must then actually focus on. So like I just said, you want to funnel out the parts of ICT, okay, that you actually want to use, right? But how do you actually go about doing this, okay? You do this by using the tools you believe will equip you with the best chance of identifying a high probability condition in the market, right? I'm actually going to make a video on what I believe are the key points you need to use or correlate together to identify that. It'll be out in like 3 days time, okay? So the key points just for now, right, are looking at the when part. So that's the time element, okay? You need to figure out what kill zones you're going to be looking at, what time of day you want to look at. Maybe it's macros, maybe it's AM session, maybe it's London kill zone. And then where, okay? Where would be at what PD arrays, right? Or if an FEG is filled, etc, etc, etc. Okay, the where part is basically the price element, okay? And you want to look at time and price, and then you want to look at how can you combine those two elements in order to find the highest probability conditions, right? And what I mean by that is you're looking, okay, to understand what concepts you can use to forecast a high probability expansion. So what factors, what tools, what utilities can you use to identify that price is likely to run aggressively in one direction? That's basically what you're trying to do, right? As a trader in general, you're trying to find what they would refer to as a low resistance liquidity run, the path of least resistance in Wyckoff, if that's something you trade. That's what you're basically looking at, right? We all want to know the trade that's going to run in one direction, okay, to your target. So if you focus on that and build an edge around that, then you're pretty much sorted there, right? So with that, form a trading model, okay, which is like a graphic. It's a picture depiction of what tools you're using and how you're putting them all together. And then you're going to create a trade plan. That's your long structured process in how you go about executing on your model. Then you want to journal all your trades and just measure your ability to execute the plan. Okay, that is pretty much it. The last 3 points are basically what you do as a trader day to day to actually bridge yourself to that profitability point. Okay, and then finally you improve over time. That's why trading actually takes time, okay, because it takes time to learn the concepts, then you need to build the edge, right? And in between all that, you might just be fluffing around on social media, just pissing about, not really doing anything, not realizing that you actually need a trading edge in the first place, which was me. And then you need to form the edge, execute on the edge, improve the edge over time, right? Because everyone looks at profitability as this sort of line, and once you bridge over, then you're successful. It doesn't really work like that, right? Once you are successful, once you are profitable, you're still gonna be improving that edge over time, right? And I don't mean improving the edge by adding new concepts. You might just be improving the edge by looking at the last 3 losses you took and identifying what they all have in common, so you don't do that again. Okay, and then in turn, that's going to improve your win-loss ratio, and that's going to overall improve your strike rate and allow you to gain more percentage over the month, right? If you look at my last newsletter, I actually mentioned a key lesson that I was taught coming up, and the idea is that your aim isn't actually to take more winners, it's actually to eliminate the losses in between your winners. Okay, I know it sounds quite simple, but that in itself was a game changer for me. Okay, because it shifts the focus from, okay, cool, how do I win more, to actually how do I lose more. If you want to read that, then I will link that in the description below so you can check that out. But yeah, that's pretty much everything I wanted to cover. If you guys have any feedback, if any of this resonates with you, drop it in the comments. And yeah, hope to see you guys in the next video.